you're tired of missing trades because price or the market keeps ignoring or snubbing your order block, then pay attention to this video, because in this video you're going to be learning other institutional reference points that price may just be heading to. If you watch this video to the end, you will see exactly other institutional reference points that the market or the market makers may be interested in pivoting from. So this will ensure that you do not lose out on trades, because sometimes you may just be waiting for price to come back to your order block and it doesn't. It looks for another POI and then keeps buying from there or keeps selling from there. So this video specifically is we're just going to be talking about how to use fair value gaps, right? Fair value gaps. We'll talk about how to identify them, how to know the ones that are valid, and how I personally take my trades if I'm using fair value gaps to enter into trades. If you'd like to see more of that, stay to the end of this video, and after the disclaimer we'll get started. So fair value gaps are actually very easy to spot. First and foremost, what you should pay attention to is the trend of the market. There's no strategy, there's no technical analysis strategy that you'll be using that doesn't require you to at least identify the market trend first. So first and foremost, what I want to ask myself, where is price headed? Are we in a range? Are we in an uptrend? Are we in a downtrend? These are the questions I want to be asking myself. Having established that, then I want to ask myself, where on the chart do I see three candles, long candles, going towards the same direction, and how can I take advantage of them? So first and foremost, let's go into the chart. Let's see what that looks like. When you see one very long candlestick, ask yourself, especially if that candlestick is in line with the direction. Let's say we are in a buy trend. Let's say that candle is a buy movement. That candle indicates that price, there have been a lot of buys than sells within that period of time. So in that candlestick, I want to find out where is the gap between the first candlestick and the last candlestick, right? The low of the first, if it is in an uptrend, the high of the first candle, I'm looking for the space between the high of the first candle and the low of the third candle, right? That's exactly what I want to be looking for in an uptrend. And in a bearish move, I'm looking for a three candle formation, and I'm looking out for the space between the low of the first candle and the high of the last candle. So let's just stop talking and just go back to the chart. So this is an uptrend, right? So I have seen a three candle formation. I'm looking for the space between the low. This is the low. Let's see if this would be okay. So yeah, we can zoom out. So this is the high of the first candle, this is the high of the first candle, and this is the low of the third candle, right? So this space between here to here is what I'm looking for, right? This space between here to here is what I'm looking for. Okay, and you can see that price came into, but let's say that we didn't have this before. Let's say price hasn't played out. Let me use my replay to my bar replay. Let's say all of this hasn't played out. I just want to show you something, how you can be able to spot the kind of where you should even be trading from, even if you have established that okay, you have found a fair value gap. Where exactly in that fair value gap should you be trading for? Because most times fair value gaps are really large spaces, and if you just place your trade just like that, you would run the risk of having a stop loss that is so wide, and this is not what you want, right? Most people like to use a small, they are trying to find trades that will give them very small stop losses. Okay, so let's say that all of this hasn't played out. Let me pick up my bar replay tool. Let's say what we had was just this, right? Let's say what we had was just this. I'm using my replay tool. I'm looking for the pullback, right? I'm looking for the pullback. So let's say price has already given us this, and so here we go. Let's say this is what we have. How do I know that price is going to come back here? First and foremost, we should establish that any fair value in an uptrend, any fair value gap I'm looking for has to be in line with the trend, which is an uptrend, right? So I'm looking for a bullish candle, right? The space between a very large bullish candle is what I'm looking for in an uptrend. The reverse is the case if this were to be a downtrend. All right, so how I personally do it, I just pick up my, since this Fibonacci, this fair value gap is still, the space in between it is still way too long, it's still way too large for me. All I have to do is just to pick my Fibonacci retracement tool, mark out from the swing low, that movement from that range, mark out from the swing low to the swing high. Okay, and I'm just waiting for price to, usually I like to look for that, I'm waiting for price to get into the 50%, at least 50% retracement. I'm waiting for price to give me at least 50% retracement into the fair value gap before I start talking about placing my trade, right? So this is the 50%. Let me use let's use that triangle, that rectangle rather. So this is where the 50% started from, here. So I have narrowed down where I can take trades from. You know, the fair value gap started from, let me take this off. You know, the fair value gap started from the high of this candle down to this point, which is the low of this candle. But if I would want to place my trade, it will be too large for me. My stop loss will be too large, and that is not what I want. So the essence of using a Fibonacci tool to mark out 50% retracement is just so that I am actually taking that trade from a discount level, right? A discount level right now, because we're talking about an uptrend. If this were to be a downtrend, I'll be looking out for the premium level. I have made a video about premium and discount levels and how would they help you. If you haven't watched that video, I'm going to link it up right here so that you can get access to it, or maybe down in the description you're going to find it somewhere around. Just check. After, maybe you can pause this video, go to that video. If you do not know how to use this Fibonacci tool to mark out your discounts and premium levels and how they're going to help you. If you haven't learned that, you can go ahead, but if not, you can just continue with this video. So that is just the essence of me using this Fibonacci tool. Is not like there are people who do not use it, but I use it just to narrow down the range I'll be working with, right? Because it's going to help you. I can't just be taking my trade from anywhere. If it works for you, fine, but I'm just saying this is exactly how I would do it if I were to be in this market. Okay, so I don't think we have any need again for this Fibonacci tool, so I'm just going to be taking it away, and that is it. So if I see price coming anywhere into this zone, then I would be able to take my trade, right? So let us see what price did after that. So you can see that price kept attempting to, I think this should, if this would be like an engineered liquidity, or some people call it an inducement. This is just a way that the market movers and the market makers lure you retail traders into buying early or selling early. In this case, they're trying to move people to rush FOMO and then put their buy orders here. But you can see that, and the thing is, sometimes price may actually come there, pick up from somewhere here and just continue moving. I'm not saying it doesn't happen, it happens. But then the way I would be taking this trade is that I will wait for price to get comfortably into at least my 50% retracement zone. Anywhere below that, then I can take my trade. Anywhere below the start of this rectangle, I would be able to take my trade. I'll be confident to take my trade from there. Okay, so price may actually, there's a tendency for price to just come here and just keep moving, right? But most times I see this as an inducement or an engineered liquidity, a way for the market movers or the market makers to actually lure or induce retail traders. They will force you to buy early, right? And then they come back again and take your stop loss out. After taking it out, price will then proceed to go towards the original direction which you actually wanted to trade before. So it happens all the time. We see this all the time. So which is why it is always important for you to back test and see exactly how it came again, right? Again, so those traders who did not get in here after seeing it coming the second time, they may get scared. Instead, they fear that they are going to lose the trade, and what they do is they just rush and FOMO. And then sometimes it would make their, for instance, you are getting into a trade at this point, you are most likely to put your entry here. Let's say your take profit is at the last high, and then your stop loss, because you want to be, let's say you want to be conservative, okay, you would put it here. Or then some people even put it right here, put their stop loss maybe somewhere inside, and then you see that price just comes and takes you out. It happens a lot. It happens a lot. Now see what price did. Let's see what price did. Price later came back into that zone that it was just testing before. So any trader that must have taken their trade from here or from here is most likely to get stopped out, especially if your stop loss is not wide enough, right? So that's is either you get stopped out of the trade entirely, or if you are the type of trader that can stomach a wide stop loss, why not? If not, you can do that, but then it only means that your stop loss is going to be wide, and not a lot of traders are comfortable having a very wide stop loss. Okay, so that is essentially it. Okay, so that is one way to use. Let's see what price actually did after. So from here, price continue moving upwards. So we can spot other fair value gaps on the chart. Remember, I'm looking for a fair value gap that has that is in line with the trend. All right, that is in line with the trend. If it has any form of liquidity or inducement, just like this one, it's also an added advantage. It's also good for you. If it has a confluence, if it is also in line with maybe another point of interest, like mitigation block or the breaker block or any other thing like that, if it actually coincides with if it's actually in the same zone as another point of interest, it is also a very good confirmation for you to take that trade. All right, so remember, we are looking for, so take for instance, this is a fair value gap, right? Let me take this is a fair, take a look at this one. So this right here, of course, this right here is a very large space between the first and the third candle. So let me use my replay tool. Let's say this was where we were right here. So let's say this was where we were, but then if you look at this very well, if you take a very good look at this price overall, if I go over to the larger time frame, to the higher time frame, you can see that price is coming from a support zone, right? So this is just like a retracement. So one thing you should bear in mind is that ask yourself, what exactly is the trend, the overall trend of the market? If price is in a downtrend, then I would be focusing more on bearish fair value gaps, right? That I can wait for price to go back to and then sell from there. If price is in an uptrend, I'm looking for bullish fair value gaps that I can wait for price to come back to. Okay, so now price is in an uptrend, but then I wouldn't be paying attention to this fair value gap right here. Of course, it is a fair value gap. It's a very good looking fair value gap. Look at the space between this and this, the first candle and the last candle, the low of the first candle and the high of the last candle. This is a fair value gap, but then I wouldn't be using this. I personally wouldn't be using this because we are in an uptrend. Overall, we are in an uptrend, so I want to be paying attention more to the fair value gaps that are in line with the trend of the market. Okay, so this hasn't given us a pullback yet, so let's see if we can find that first. Pullback has happened. Yes, price has come into that zone. So let's see whether price will respect that zone, right? So that's what we're looking out for, if price is going to respect that zone. And of course, price just violated it and continued its way, because that fair value gap is not in line with the trend of the market. The trend of the market right now is an uptrend, right? So I only want to be paying attention to fair value gaps that are in line with the trend, which is an uptrend, right? So sometimes price may just be in a downtrend, right? Price may just be in a downtrend. Now look at another fair value gap. In this case, you can see that price is in a downtrend. Price has been coming from a resistance zone, and price has been doing all of this. So now I've spotted a fair value gap right here, and you can see that price actually respected it. I'm looking at the space between, there's a fair value gap right here, there's a fair value gap here, okay, there is another fair value gap right here, the space between the low of the first candle and the high of the third candle, because we are in a downtrend, right? Because we are in a downtrend. So let's see if I can zoom this out a bit so that you can see what it is. Let me zoom this out a bit. Okay, I think it's okay right here. So we have already, remember, we have established that price is in a downtrend. In this case, price is in a downtrend. It's coming from a resistance zone. You can see it right there. It's coming from a resistance zone. So in this case, all I want to be looking out for is bearish fair value gaps, not bullish ones. If I see if it is green you use, if I see a very large buy candle, right, a very large buy candle or a fair value gap, I wouldn't be paying attention to, because in this case we are in a downtrend, right? So I have spotted about two fair value gaps. I've spotted this one right here. You can see the space between. Check this out. I want you to be seeing why I picked this side. So this is the low, this is the low of this candle formation right here. This is the low of this candle. You can see, you can pay attention now. Everything about the candlestick is what you are paying attention to, both the wick and the body. Don't ignore any. Okay, so in this case, I'm not picking here because all of these they don't have spaces. Let's say this three candle formation, right? This three candle formation, we only have a space between this small candle right here and this candle right here. I think I didn't mark this well enough. So it's supposed to start from the, it's supposed to end rather at the high of this third candle. All right, it's supposed to, especially if it has a body. Now I will tell you why I wouldn't be choosing this particular one, right? I'll tell you why I wouldn't be choosing this particular, or why I will be choosing this one, this formation, over this formation. You can see that in this fair value gap right here, it covers, the space covers both the body and some part of the wick. That's not what I'm interested in, right? That's not what I'm interested in. As far as the candle that I'm paying attention to, I want it to be only the body, right? But it can start or end at the wick or body of the first or the last candle, right? It doesn't matter whether the first or the last candle, whether it is the body or a wick. What is important is that the middle candlestick, I'm focusing on the body, right? I'm focusing on the body of the candlestick. So in this case, this is the low of the first candle in this formation, and then the high of the third candle in this formation, right? So that's what I'm just going to be doing. I'm just going to be extending it. Okay, I'm just going to be extending it, and that is what I'm going to be doing. So let me even pick my Fibonacci tool, right? I want the 50% of this arrangement. Okay, again, like I said, it's not a must you do this. You eventually you have to go back and back test and see what actually works for you. This is what works for me, and that is why I stick to looking for the 50% retracement. Okay, so this is the entirety of the fair value gap, right? And I only, like I said, I only want to be paying attention to the 50%. Okay, so the 50%, I'm just going to be this rectangle, I'm just going to be adjusting the rectangle so that it fits the 50% that I talked about. Okay, so 50% is what I'm looking for. You can see this is where the 50% started from. Okay, so I would be taking away the the Fibonacci tool. Okay, I'll be taking away the Fibonacci tool, and I'll be extending my rectangle into the future, so that whenever price gets into that zone, I'm able to key into it and sell from there. Because again, remember, we are in a downtrend in this case. So I've taken away the Fibonacci retracement tool, and then I'm just going, so like we did before, let's say that price was here. Let's take all of this away. Let's say price was somewhere here, and I have spotted this. Again, it seems there's another fair value gap right here. I mean the space between this and this, right? If I'm not mistaken, there's a space between this and this. But if you look at this, I think I shouldn't even mention why I'm just going to be ignoring this one. And let's see if you have been following throughout. You can type your comments or what you think, why you think I didn't pay attention to this particular fair value gap, why I failed to take cognizance of this fair value gap and then focused on this one, right? If you have any idea why, just drop it in the comment section. Okay, so you can see that there's fair value gap 1, fair value gap 2, fair value gap 3. Yes, even this one is also valid. Sometimes price may decide to come into this, but this one, I'm sure that price is most likely, this is the one that price is most likely going to ignore. This one price is going to violate this one. I'm almost 98% sure that price is going to violate. It's not going to pay attention to this fair value gap. If you know why, you can drop you can drop it in the comment section. But out of these 3 fair value gaps, I would be paying attention to these 2, and I have told you why I wouldn't be focusing on this. I would rather go for this. Okay, so I think let me just say it why. Okay, but you can still put your comments in the comment section anyway. But let me just tell you why I wouldn't even bother taking a trade from this one. If you look at it very well, again, let's talk about the fair value, the Fibonacci retracement tool. This Fibonacci retracement tool is going to help you in a lot of things. So it's very, very important that you learn how to use it. Go and watch the video that we talked about discounts and premium. So in this case, this is like so this is a break of structure right here. Even though it's not so deep, this is a break of structure right here. Yeah, a break of structure right here, and this is a swing high. This is the last swing high, right? And this is the last swing low. Let's even allow price to play out a bit so that we can clearly see the pullback. All right, because nothing happens here if we do not see the pullback. Again, if you do not know how to use pullbacks, or you don't know anything about pullbacks, I made another video about pullbacks. I'll link it up right here. You can get access to it, and then you can come back to this video. So right here, let's see if we have a pullback first. Let's see if we have a pullback. We don't have a pullback right now. For now, we don't have a pullback. So let's okay, now we do have a pullback, right? Now we do have a pullback right here, where price took out the high of this candle that had the lowest point. Okay, so that's for another video about pullbacks. Okay, so having established the pullback, I want to now ask myself, which of these fair value gaps should I be paying attention to? And again, like I said, me looking at it, I already know that I wouldn't be taking this first pullback right here, right? So why is that so? It is not inside of, let me open that, it is not inside of 50% retracement of this swing or of this range. So let's take out this Fibonacci tool again. This is the swing high. I'm just going to be taking it from the swing high to the swing low. Okay, to the swing low. Let's even say the swing low is here. All right, you can see that this fair value gap is not anywhere inside of this 50%, this golden pocket, this honey pocket, right? This place where the magic actually happens. Because we are in a downtrend, I am looking for a premium opportunity. This fair value gap right here is seated in a discount zone, which is what I don't want, because price can just take it out at any time, because this is a downtrend. Market makers are looking for a premium level to sell from, not a discount level to sell from. Okay, so that is why I wouldn't even be paying attention to this fair value gap at all. I am only paying attention to these two fair value gaps here, which is because they both are in the premium level of this range, right? They are in the premium level of this range, and that is the reason why I wouldn't even bother taking a trade from here. No matter how sweet the trade looks, no matter how A plus the trade looks, I wouldn't be taking a trade, a sell trade from here, right? Except I want to counter trade. Of course, I will be looking for a buy here, because I know that price is eventually going to enter into this, any of these zones right here, from here to here. Let me say that again. Price is going to only come from here, from this swing high down to the 50%, and is going to look for a sell from there, from any zone it finds. Which particular zone is going to take, nobody really knows. But then I wouldn't be taking a sell from this fair value gap that is inside of a discount level. I wouldn't be doing that. Okay, so that's the reason I wouldn't be paying attention to this. So I'm just going to even take it away. Okay, I'm just going to take it away generally. And again, I told you the reason why I canceled this, right? Even though price might still come back and take it too, I'm not saying it's not possible, but I'm saying in these two fair value gaps, this is the one. I've already told you the reason why I'll be taking this one instead of this one, because this one too is also in a very nice position, right? So price can still come back to it. Okay, so I can make this my trade one and trade two. Anyone that goes is okay. Okay, so let me take off the Fibonacci tool, right? Let me take off the Fibonacci tool, and then let's see what price does. Okay, price kept going down. Okay, it was still in a range, and then it came back. Now again, what I said earlier about inducements and liquidity, this is how the market movers or the market makers trap retail traders and force you to take your trades in places where you would ordinarily wouldn't take your trades. Okay, so this is where we're focusing on, right? This is where our point of interest should be. Let me extend that and drag it down into the future. And then let's say I already have my sell position tool right here. Let's say I have my sell position tool right here, and I will just be taking the last low, right? I'll be taking the last low is somewhere here. I'll be taking the last low here. So you can see how price is just, all of this happening here, this right here, and this right here, these 3 points. I'm just saying it as a way that the market is forcing or inducing traders, retail especially, to force them or make them FOMO into selling, thinking that price has left them, and then that's why they keep advising, don't chase your trades. Any trade that doesn't turn out well, there will be thousands and thousands of opportunities in the market, so there's no point of chasing a trade. Okay, so let's see what price continues to do. Now, those of you who must have entered here in a hurry thinking that price has left you, you can see that price comes back to take you out entirely, and then it comes back to this fair value gap here, and then continues to sell from there. Okay, it continues to sell down, it went. So let's say we extend this. This is what price would have done. All right, so like I always say, most of these concepts work on all time frames, or they work on all of the securities you may be trading. All you have to do is just sit down and pay attention to it, go back and back test, and find out how these points of interest, how they work in your own security that you love trading, or in which time frame. All right, so if you do not back test a strategy, then you shouldn't even be trading it on a live account. I always say that always backtest. It's not enough it is not enough to watch a video. It is not enough to watch series of videos. Make sure that you go back and back test them. If this video has been of any help or any value to you, please smash that like button, subscribe to the YouTube channel, turn on the post notification, so that a lot of people who are also ignorant of this can actually see this type of information. It helps the algorithm so that a lot of people see this and get to see this information just as it has helped you. If you want to learn more about how to use all of this ICT or SMC concept, check out my next video.